Thank you, Ronak. Good afternoon, everyone. I hope you and your families are staying safe and healthy during these difficult times. Thank you for joining us on the second quarter and the first half 2020 results call. We all know that the country and several communities continue to witness unprecedented and very difficult times caused by several factors. The continued economic slowdown, lower GDP, vehicle sales decline, uncertainty around BS6, liquidity crunch, and the continued COVID-19 pandemic have been causing severe demand and supply disruptions for the lubricants industry. Despite this challenging environment, Castrol India has shown continued resilience and determination during the second quarter of 2020 while being focused towards three priorities. One, protecting our people. Second, supporting communities. And third, protecting the financial health of our business in these difficult times. I would like to thank all our teams for their hard work and commitment during these difficult times. Both our plant teams who have continued operations in a safe manner to fulfill customer demand and all our teams working virtually from home. We have committed to 11.7 crores of our annual CSR spend towards supporting communities impacted by COVID, including hospitals and critical medical equipment, truckers and mechanics, refuse collectors, migrant laborers, daily wage workers, police personnel, and essential service workers. Customers are at the center of what we do, and we have continued to fulfill most of their demand even during this difficult time due to our strong supply chain and distribution network. We acquired close to 1,000 new customers or retail outlets during this period. As part of our strategic delivery, we have continued to progress on our priority areas. We are very excited with the strategic alliance we have entered into with the GOBP retail sites, which will greatly enhance the reach and visibility of Castrol lubricants across 1,400 GOBP sites, which will expand to 5,500 retail sites over the next 5 years. We have leveraged digital, built strong virtual customer connects, and deeper relationships while continuing to acquire new customers, renew contracts, and strengthen our advocacy efforts with key stakeholders. We started several online trainings and offers, including for mechanics and our B2B customers and prospects, in order to help them safely resume work when they restart business. Financially, we have delivered 45% versus last year of our turnover and more than 35% of PAT. Protecting cash was our key focus area, and cash delivery was very healthy at 85% of 2019 first half. We have supported our customers through extended credit terms and schemes to revive trade. This, along with judicious cost management and efficiency programs, have helped us maintain a current strong liquidity and financial position to be able to meet any near-term challenges. Lastly, I would say that we continue to monitor the ongoing crisis very closely and are constantly working towards protecting the long-term health and sustainability of our business. We have a new TVC on air for our largest selling two-wheeler brand, Castrol Active, which went live a week back, just as things are picking up, especially in the personal mobility sector. This is an example of our agility and the responsiveness we have continued to display in this volatile situation, which is also a reflection of the strong fundamentals of the business. Our strategy remains unchanged, and we are confident of long-term profitable business growth as economic activities return to normalcy. And now, with this, I'll close my opening remarks and welcome the Q&A session. And I have Rashmi, our CFO, with us, and between the two of us, we'll answer any questions that you may have. Thank you very much.
Thank you. We will now begin the question answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Tarun Lokatia from Kotak Securities. Please go ahead.
Yeah, hi. Thanks for taking my question. I have a couple of them. First one, could you share, how were the volumes in this quarter?
So, Rashmi, would you like to respond to that? Sure.
Sorry, I was on mute. Yeah, this quarter we did 29 million liters.
Okay. 29 million liters. Okay. And, are we now in the, we are already pretty much at the end of July. So are we back to normal, let's say 80%, 90% normal? So could you comment anything on that?
Well, I will not state the percentage, but all I can say is that the momentum looks stable post-June. However, this whole changes in the lockdown in various states from time to time make it very difficult to really estimate what is going to happen. But I would say that it's looking quite stable.
Okay. And the second question that I have is that, there is a reasonable amount of cash which is being accumulated on the balance sheet. I know that you prefer dividend as a payout mechanism and you continue to pay out higher dividends. But is there any thinking of, given where the stock is there any thinking of considering a buyback at some point of time and, which may be also a route to, enhance your whatever returns and, value for the shareholder in some way?
So, Tarun, thank you for that suggestion. I think we've been getting it. So we will consider that in our conversations. Thank you so much.
Yeah, thank you.
Thank you. We take the next question from the line of Puneet Gulati from HSBC.
Yeah, hi. Thanks for the opportunity. Can you comment a bit more on how the BP's relationship with Jio will likely impact your growth perspective? You talked a bit about 1,400 outlets going to 5,500. Is there anything more to it that you can comment? And if you can give some sense of the timeline for this for the same.
Yeah, so let me take that. I think, first of all, what I'd like to say is it's a very exciting growth opportunity for us because, as I said in my opening remarks, there are 1,400 Reliance retail sites now which have been transferred or will transfer into the JV, which is Reliance BP Mobility Limited. And the exciting opportunity for us in Castrol is we're the sole lubricant supplier on all these sites, or the lubricant supplier to the JV, which means that it gives us a good opportunity for sales at these outlets, and also from a brand visibility perspective because millions of consumers visit these retail sites for refueling. The other exciting opportunity is also with the Jio digital platform and the JV. It also gives us potential to participate in any future mobility services that we can offer on these sites and being part of that journey. As far as timelines are concerned, we've already started supply to some of these outlets because the JV has gone live. And these are very early days, but supplies are on, and I think let's see how demand picks up. But we're looking forward to this as a growth opportunity.
So will it be fair to say that 1,400 outlets to start with will be incremental to your growth because nothing you were supplying through those channels before?
Yeah, I think will it be 100% incremental? Difficult to say, but our presence in this channel was kind of not there earlier, and that's why we're seeing it as a growth opportunity.
Okay. And you also mentioned about future mobility. So does that mean Castrol intend to venture beyond the lubricant space as well?
I think we always keep looking at potential opportunities. It's very difficult to say anything specific right now. But for example, you've seen that we partnered with 3M on automotive care range of products. So we constantly keep evaluating what is the possibility for the future, and if any good ideas or opportunities come in future mobility space, we'll be open to look at that.
Okay, great. That's all from my side. Thank you so much.
Thank you. Before we take the next question, I'd like to remind all participants, please limit your question to 2 per participant. You may come back in the question queue if you have a follow-up. We take the next question from the line of Sweta Jain from ANS Wealth. Please go ahead.
Hello?
Yeah, Shweta, we can hear you.
Yeah, hi, sir. So I have a couple of questions. One was, if you could give some sense to, how is the sensitivity of our gross margin with respect to crude oil prices. One was that. And the second question was, if you could let us know what is the quarterly cash burn and fixed to variable cost proportion.
So I'll hand over. Rashmi, do you want to take these questions, please?
Yes, Sandeep. Sorry, can you please repeat the first question?
Okay. So, ma'am, I just wanted to understand the sensitivity to a gross margins with respect to the crude oil prices. So if you could give some sense, how does these two correlate and what impact it has on the gross margin?
Okay. So I think the base oil prices have been probably the lowest in the quarter that has gone by. Going forward, we might see some strengthening in base oil prices based on the demand that is coming through globally. What will happen is each time there is a change in base oil price. Base oil is a crude derivative, so I'm addressing base oil and not crude. There is a time lag between the changes of price of crude and changes of price of base oil, depending on the stock holdings and the choices that refiners make basis demand supply, whether they want to do base oil or something else out of the crude that they have. Okay, so base oil impacts, it's a significant portion of our product, so it impacts significantly. We do not expect big changes to happen going forward in the base oil prices in the near future. In terms of sensitivity to gross margin, the way I would put it is there are two factors. One is the cost of goods, which gets impacted immediately after the base oil prices change within a month or two. However, there is a sales price realization, and the base oil changes also could impact those through competitive actions. Okay, so we do have to look at what pricing premiums are holding in the market if the base oil prices are low for a long time, so that we are able to retain our volume share in the market, usually competition. And hence the changes to gross margin will depend on that also. Okay, so it's difficult to say that whether a particular amount of base oil change will result in immediate change in gross margin to the same extent. Yeah. The other question was on cash burn, right? So I think we spend about 90 crores.
Okay.
Yeah. Every
quarter, right? Per quarter.
Every quarter, yeah. And about a third of that is fixed.
Okay. So just to follow up, so basically the first question, what I understand is, correct me if I'm wrong, ma'am, the gross margin is dependent on basically the cost of goods sold, which is directly, it impacts directly, right? I mean, immediately you can see the impact of it.
1 or 2 months lag because of stock.
Okay. Yeah. Okay. And the sales price realization also impacts the gross margin. which depends on how do you decide the sales price realization? Like, how does it move?
So we hold certain pricing premiums, and there are different pricing premiums versus competition on different brands depending on the strategy for each brand, and depends on the which geography we are in. Yeah.
Okay.
So the team keeps looking at those pricing premiums, considering the impact of those premiums on volumes. Yeah, and basis that we take pricing interventions, and then the gross margin is a function of both prices as well as cost.
Right.
Yeah?
Okay. So price intervention may or may not happen, but cost of goods can definitely will be there, right?
Yes.
Okay. Thank you, ma'am. That helps. Thanks.
Thank you.
Thank you. We take the next question from Vaibhav Bajatia from HNI Investment. Please go ahead.
Thanks for providing the opportunity. So if we look at the long-term evolution of your business, if I look at some of the volume numbers in 90, 97, 98, and volume numbers today, even I'm not talking about the Corona period, even before Corona, say in FY 2019, they're broadly same. So they are it's like 20 years our volumes have not changed. While I have no concern on the profitability, but what is it in the strategy that is leading to such kind of flat volume for 2 decades? I just wanted to understand that what is there that we are fine with 2 decades of no volume growth.
So, Sandeep, you want me to take that?
Yeah, you can take that, and then if I have anything to add, I'll add.
Yeah. So if you look at our stated strategy, it is driving profitable volume growth. Yeah. So the lubricant market in India is about 2.5 billion liters. Yeah. And of which approximately half is what is relevant to us. A large portion of our portfolio is automotive. And of the 1.2 billion, I think about 50% is industrial and commercial vehicles. And the balance is personal mobility. The personal mobility market is growing, and it will grow faster than the rest. And that is what is the basis of our strategy. And that's the volume that is going to give profit. Okay, so our strategy was very clear for last at least 5 to 10 years, is that we will do profitable volume growth. In lubricants, where the technology is changing fast and the usage of lubricant is declining each year because people want to use less oils. There's this green agenda which now most oil majors have adopted, as the next objective for themselves, right? So the lesser oil you use, the better it is for environment. And of course, there's a cost of ownership issue that the OEMs drive, and because of which they reduce the oil consumption that will happen in their engines. As a result of which, you will always see that the volumes will decline in the longer period. At least in India, because we are a developing country, you see some increase in volume 1 or 2% each year. In mature markets, either the volumes are flat or they're declining. So in such an industry, focusing only on volume for growth in value will not help us in creating overall shareholder value. Hence the strategy to focus on personal mobility, which also means that you have to make volume value choices in the other segments. That is what we've been doing. So if you see, if you can just recall whatever 98, 78, whatever, what was the per liter gross profit and now what it is. Okay. Yeah. And then you will see that the value has been created for shareholders through this strategy. And that's why we are still following that strategy, because going forward also we see huge potential for growth in personal mobility and probably not so much in the other commercial vehicle oils. Yeah?
Mm-hmm. Right. So exactly, I have no concern on profitability because your gross margin per ton has expanded dramatically over 20 years, which is what has driven our return. But
so we could have followed the volume path of just growing volumes and probably not deliver so much of profit. Yeah, because you have to give really deep discounts to be able to get those volumes, and even after giving it, you're not sure you'll get the volume because somebody else is giving more discount than you already. So we are not that kind of company. We are premium lubricant company.
But is there a limit to this, margin per ton expansion, because it has reached really, really high level over last, 5-6 years. I mean, there has to be a point where the consumers will think that is just too much of a difference, and they might shift to other brands, which is probably the reason in terms of market share, other players are growing faster in spite of the overall industry headwind.
Yeah.
So can I comment on?
Sure.
Rashmi.
For a minute.
Yeah. Please continue.
Yeah. So if you see last 3 or 4 years, our unit margin has not grown substantially. And so we have consciously ensured that the improvement in margin is largely led by mix improvement and not by pricing. Okay, so we have taken care that we are not unnecessarily putting higher prices in the market. As I said, we look at pricing premiums vis-a-vis competition, and we do take pricing action. So an example is last year, fourth quarter, we did take pricing action in commercial vehicles portfolio. Okay, which led to some margin dilution, but we are okay with that. So we are looking at those aspects also, but it's a balancing thing. There is not always one way that you can go. Sorry, Sandeep, you wanted to add.
Yeah, I think the only thing I want to add is there are a few other things which you need to consider that are happening in the market. So first of all, I think as the technology evolves, that gives us upgrading opportunities in the market, okay? Because as engines become more efficient, they use more technologically advanced products, which obviously give us an opportunity to market more premium products. And as you see the evolution, the oils are becoming thinner. From 20 Ws, there's a movement to 10 Ws, and then most of the cars today will be using 5 Ws in the world. And if I look at developed countries like Europe and all, they already moved to 0 Ws, okay? So that's another phenomenon that helps keeping the portfolio robust and keeping our margin levels at where we want them to be. Second, as Rashmi was saying, we have a pricing strategy. It's not that we completely want to outprice ourselves from the market. So we follow a certain pricing strategy, and we keep looking at our premiums versus competition. But at the same time, we've also introduced new products to participate in the larger categories. For example, we introduced RX Essential in the commercial vehicle segment, which is at the lower end of the market. We have Active Essential, which is plays in two-wheeler segment at the lower price point. So it's not kind of one game in town. It's a combination of various factors.
Mm-hmm. Got it. Thank you. That's it from my side. I will come back in the question.
Sure. Thank you.
Thank you. We take the next question from the line of S. Ramesh from Nirmal Bang. Please go ahead.
Yeah, good morning, and thank you very much. So if you look at the IOI decline in revenue for the quarter, can you give us the breakup between the impact from volumes and impact from prices for the second quarter?
Yeah, Rashmi, do you want to?
Sorry, yeah.
Yeah, so your YOY, the revenue has come down 53% compared to the second quarter last year. So can you give us the impact of volumes compared to the same period last year?
Volume compared to the same period last year. So volumes are about lower by 55%, right? Compared to last year. Yeah.
Okay.
So last year was
55
million liters. Yeah.
Okay. So, and if you look at the sequential movement in the margins, it looks like, you have possibly seen some acceleration in the volume, say, between May and June. So is there any volumes you're pushing to the channel who's possibly holding higher stock? And is there a push in terms of higher value products this quarter compared to the fourth quarter?
So we are not pushing volumes, that's number one. We are just servicing the demand that is arising. The plants were closed, so we didn't have stock to push. Okay. So we had enough stocks at our CNS locations, so we could service the demand, and there were times where we serviced the demand from plant directly because of lockdown issues or from some other stock locations than the usual one. Yeah. So the distributor stock pipeline is pretty light, I would say, or managed well. We are not pushing stocks in the system. There was sufficient demand that we saw in May and June, and the personal mobility demand also went up in June sometime, especially the two-wheeler oil demand.
Yeah, Rashmi, I think one thing I'd like to comment on is, as you rightly said, we're not pushing stocks into trade because stock sitting in trade doesn't help if you can't collect cash for that trade. And I think that's one area where strength of Castrol has played very well in the second quarter, in May-June period, because we were able to supply to demand, and at the same time we were able to collect our cash from the trade, which has been pretty strong performance on cash delivery.
Yeah.
Okay, so if I may look at the big picture, longer term, because of the concern about the shift from the internal combustion engine to electric vehicles, and there was a mention about your company looking at solutions for electric vehicles in terms of liquids or products for the electric vehicle engine. So, is there anything you can share in terms of how you see the market growing? What are the kind of new products you may like to introduce maybe over the next 2 years? Any thoughts on that?
So let me try and answer that. First of all, I think the demand for engine oils based on internal combustion engines is going to continue over the next 20, 30 years if I look at India. So it's not if things are going to go electric in the short term, because if you look at our penetration of vehicle ownership is pretty low in India, especially if you look at cars. So in our engine oil business or lubricants business based on internal combustion engines is going to stay pretty healthy over the next few decades. At the same time, we leverage a lot of our global technologies R&D as far as EV fluids are concerned. So we have a portfolio of EV fluids approved by OEMs. And I'm very happy to kind of say that we are supplying EV fluids to Tata electric vehicles and MG electric vehicles in India. So we're already starting on that journey. But is it going to be a huge part of the business in the coming decades? Possibly not. Our business will pretty much be focused around servicing demand from ICEs.
That was helpful. Thank you very much.
Thank you. Next question is from the line of Nitin Tiwari from Antique Stock Broking. Please go ahead.
Hi, good afternoon. Thanks for taking my question.
Mr. Tiwari, I'm sorry to interrupt. Your audio is not audible, sir. Requesting you to please speak a bit louder.
One moment. Is it better now?
Yes, please continue. Thank you.
Yeah, good afternoon. Thanks for taking my question. I hope Sandeep and Rashmi that you guys are also doing well and keeping safe. So I just wanted to I wanted you to elaborate a little bit on your sales mix in this quarter, and how do you see that evolving in the next 6 months of this financial year?
Rashmi, do you want to take?
Yeah. So in terms of sales mix, as I said, the personal mobility volumes were better towards June. There was demand in commercial vehicles because of agri. The agri demand was good. Agriculture is easy. So overall, I think the mix was better.
I was coming more from the standpoint of the breakup between automotive and non-automotive. If you can help me with that.
So automotive was about. Automotive was, I can talk of for first half year, not so much the second quarter.
Sure.
So we are close to 90%. The rest was industrial and others.
All right. So automotive was 90%. and secondly, you mentioned overall volume number at about 29 million liters, right, for this quarter?
Yeah.
Great. And in a second question would be around what are your thoughts about addition to your retail distribution channel in this year? And I believe you have about 1 lakh retail distributor partners. So where would that be headed in this year? And also, if you can talk a little bit about your ad spend for this quarter and for the next six months.
Well, The retail distribution, the 100,000 number you have is the retail outlets which are serviced by our distributors. So they're not a direct customers.
Of course.
And so during the quarter we added about 500 retail outlets and 500 new customers through virtual engagements with various customers. Okay. What's the plan for expansion? So there are a lot of things being done on distribution side in terms of improvements. Considering the COVID situation, right now it's very difficult to say any numbers, but we are very keen to improve and be better in whatever we are doing on the distribution side. And I'm sure there will be, as time goes by and things improve, we will be able to come back with something more concrete.
That's helpful. And also on your ad spend, if you can elaborate a little bit, how was it in this quarter
So this quarter ad spend was very low because the demand was very low, and there's no point in spending money on advertising when there is no way you can buy the product. Right? So we had taken down our ad spend quite a bit, but we started spending again, and we will see our advertisement on TV in July.
Right.
So we will come back to normal levels going forward.
Which is about 6 to 7% of your top line for the rest of 6 months. That's the right number to look at.
I don't know whether 6 or 7%. Again, it will all depend on how things are there in the market, whether the demand really picks up. But as I said, we have started spending. There are some new product launches that are lined up, so we will spend as required.
Sure. Thank you so much for all the answers.
Thank you.
Thank you. Next question is from the line of Shraddha Sharma, individual investor. Please go ahead.
Hi, ma'am. Would you be able to spell out where will we be progressing on the capex and how many million liters will the capex add to? And so, today if you're at 200 million liters, what would your future capacity be? And would you have the split between OEM and secondary sales in the automotive side?
Sorry, OEM and?
Secondaries, like servicing and service centers and all those things. Would you track that if possible?
Yeah. So OEM and that secondary, as you call it, it's about 10% of our volumes usually. Okay.
So 90 and 10, is it?
Yeah. What is your first question? Sorry, I missed that.
The capex, ma'am. The Silvassa capex of 40 million liters. I mean, what would that take? Where are we progressing on that? Feb also go live.
So we started work on that. However, considering the demand drop that has happened because of COVID and the uncertainty of the situation around us, if you see across the world, the demand has dropped, and generally the business sentiment is not very positive at the moment. Considering that, we're going slow on that capex this year. However, it's still in the pipeline, and it's more than adding to the capacity into the personal mobility product capacity, which still remains a relevant capex to spend on. So you will see that coming through next year. As of now, that's the view.
Thank you. Before we take the next question, a reminder to the participants, please limit your question to 2 per participant. Next question is from Kiran Naik from Modi FinCap. Please go ahead.
Yes, sir. Yes, ma'am. Hold on. So, hello?
Yeah.
Yeah, so I have a question on your deal with the Reliance Industries. You said that they have 1,400 outlets and our product will be sold on that on their outlets. So with our Castrol product, other companies' products also will be sold, or exclusively Castrol?
No, it's going to be exclusively Castrol.
Okay, and for those 5,000 also, which are going to come further?
Yes, over the next 5 years.
Okay, and is there in this deal have we taken any stake in Reliance, or Reliance has taken any stake in our company, anything like that, or it's just a simple joint venture?
No, it's a joint venture between Reliance and BP. So Reliance has 51% and BP has 49%. But as far as Castrol India Limited is concerned, we are a supplier to the JV.
Okay, thank you, sir. Thank you.
Thank you. Next question is from the line of Shraddha Seth from Edelweiss. Please go ahead.
Yeah, thank you for the opportunity. Just a question on the volume this quarter. If you could just give cover, how was it spread across different segments within the automobile? So how was the hit in the CV and the other segments?
So,
Rashmi,
do you want to respond?
I'll do that. Yeah. Okay. So it was about 45% personal mobility and the balance of CV and industrial, Shraddha.
And as we are, seeing the comments across OE suppliers that, July things have picked up. It could be possibly pent-up demand or things picking up. So if you could just give some, color in terms of how, for our industry, we are seeing the demand trend.
So we actually answered this question before, Shraddha. So we are seeing stable demand, as I said. However, considering the fact that the lockdowns are being imposed again in various states, it's difficult to, at the moment, say how it's going to land. But we did see stable demand during July.
When you say stable, meaning things are picking up from May?
Yes, I will say that.
Yeah, Shraddha, let me also kind of add on. We're seeing demand pick up, and I think we're seeing good demand pick up in two-wheelers to begin with. And as Rashmi stated earlier, in May and June, second half of May and June, we had good demand from agri, which was more related to the harvest season. But in July, we're seeing stable demand. Recovery seems to be faster in two-wheelers as compared to the other segments, whether it is commercial vehicles or passenger cars.
Okay, thank you. That's helpful. And just on the pricing action, I think, gross profit per liter has come down to roughly about 90 rupees. So, I mean, how are we evaluating going forward in light of, volumes, in light of base oil coming up a bit, and in terms of demand pickup, are we considering any further pricing actions?
So,
I think we...
Sorry.
Go ahead. No, go ahead, please.
So in the last quarter, we had to make an intervention in terms of giving schemes. So we gave a scheme of 1, 3, and 10. It was more designed to help getting the movement going in the market, which was suffering because of lockdown. And that actually helped because our distributors were able to move the goods and sell and collect our money. I think our focus in Q2 was collection of cash because there was a lot of fear in the market in general in terms of liquidity and ability to pay back the debt. So considering that, we had floated a scheme. That scheme got over in June, so we expect the realizations to look better going forward.
Thank you. Next question is from the line of Sapri Hazarika from Emkay Global. Please go ahead.
Yeah, good afternoon. I have two questions. So, first one is so we understood about this decline in net realization that you have pointed to the scheme that was there in Q2. But against that, your cost of goods sold, I mean the unit base oil price also seems to have gone up. So anything specific on that? Because otherwise that was like a quarter with the lowest oil prices.
No, base oil price has not gone up.
I mean, if I divide your, I think, raw material cost with the...
Yeah, that is because of forex, not because of base oil.
Okay, so that is part of... okay, so overall base oil has remained flat. So there's nothing exceptional on that or nothing as such, right?
No. It's just the forex that is impacted.
Okay, ma'am. And second question is on this. You have earlier also maintained the guidance of around 5% medium to long-term volume CAGR. So you continue to maintain that, and when do you think that you should be like back to that kind of trajectory? Any guidance on that?
So we would like to maintain that as a strategy, as a stated strategy, and we will have to review all what we do in the light of COVID situation in the short term. Okay, and once we do that review, and if there is a change, we will talk about it. But at the moment, that's the longer term number that we're still holding on to. And in 2020 is going to be a year of aberration, obviously. And we'll have to see how 2021 pans out post this whole pandemic in 2020 and the impact of that on global economy as well as on India.
And your OpEx run rate will be this, or it can again go up with higher volumes?
Okay, I mean the variable cost will go up.
Variable part will go up. So,
and the freight, etc., obviously, it will go up. So other expenses drop that you're seeing today is not going to remain at that level. However, we, as a company, have always been very conscious of costs, and we've been taking actions almost every year, every 2 years in terms of driving efficiency. And you would see that the way our employee benefit costs are shown. And that our costs have grown almost half of general inflation rate each year, if you take a CAGR of 5 years. So we will continue to do things that are necessary to keep costs in control.
Right, and that expense will also behave accordingly depending on how the market opens up.
Yeah.
Right. Thank you so much, and all the best.
Thank you.
Thank you. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Sandeep for closing comments.
Yeah, so thank you very much, and thanks for all your questions, and hope we've answered the questions to the best of our ability. And I think if we look forward, I think I'd like to thank all the team of Castrol India for showing resilience in Q2. I think given the circumstances in April and May were pretty much locked down, we've been able to deliver very good cash performance. We've been able to deliver profit, although lower than last as compared to last year, but still I would say a robust performance. And if we look at the second half, there are signs of cautious optimism in the way we see stability in demand coming through. But again, it's very difficult to say given the current state of lockdowns and things opening up and closing down again. But we have pretty exciting opportunities, whether it is the GeoBP retail joint venture, or we have strong plans in terms of new product introductions. For example, we launched Active Cruise last month, which is getting good traction. We launched a GTX SUV product for passenger cars, which is also getting good traction. So cautious optimism for second half. And thank you very much, and stay safe. And all the best to you and your families. Thank you.